Here we are, clan the isms, cataclysm great. Our people out here struggling, trying to make it in this state. Everybody out here doing it, but we the ones who late. Now family, we the ones who gotta delegate. Get that money in the power, never be fake. Stick to cosign for 3. What did he say? Create jobs, support our own. Educate the same and buy back your home. Got 3 degrees, triple 10. 3 PhDs, now we on the CNN. DBTV, let's talk about negligence. Ignorance is bliss, but we can turn it to intelligence. Believe none of what you hear, half of what you see. Let's break it down here on Dr. Boyce TV. Here we are.
Hey, good morning, guys. I hope you guys can hear me okay. Let me know if you can hear me and see me okay. I'm Dr. Boyce Watkins, and welcome to the Black Financial Channel. That's theblackfinancialchannel.com. If you want daily financial news and commentary from a Black perspective, make sure you subscribe to the Black Financial Channel, theblackfinancialchannel.com. We don't just do advice. We actually have expertise. You guys know I've been a finance professor for a long time. So there are things that I will see every now and then when it comes to investing that most of your experts and analysts are going to miss. I've trained a lot of experts, through the years and stuff like that. And one of the problems that I think you have is that, you have a lot of, stock market experts that are not really experts. They've made money. And the reason they've made money is because everybody's made money. I've been speaking to you guys consistently every single day, saying that you and your kids should be investing. Your whole family should be investing, not just in stocks, but in real estate and in entrepreneurship, because that's where the money's made. The money's not made in a job. The money's made through investing. So good morning, Silver. Is that Silver Trey Salon, Turtle Island? Shout out your city. Let me know what city you come from and put your hashtag B1 in the chat. Shout out the city that you're from. I'd like to see what cities you guys come from. Arlington, Texas. Mr. Richard Riley. Good to see you. B1 Houston. Daryl Barnes. Good to see you. Janice Evans. Hello. Good morning. So let me go ahead and just jump into what I wanted to talk about today. I want to talk about Apple stock. How many of you have thought about Apple stock and the stock split and seen people sort of talking about this stock split that's coming up? Apple and Tesla have stock splits that are pretty much happening now. The date of record has already passed. The date of record means that if you are on record owning the stock at that time, then you're participating in the split, but the stock still gets sold and bought every single day. And then everything kicks in, I think, on the 31st. So the stock split is a big deal. Everybody's talking about it. Both Apple and Tesla have actually shot through the roof since the splits were announced. And I've got some theories on that in terms of why I think this is happening. Anyway, do me a favor, by the way, if you're watching online, if you could hit the thumbs up button, I'd really appreciate that. That really helps the algorithm and makes more people see the video. So here's the deal with Apple. If you ask my 2 cents, I've been asked a lot about this from my students that are in my options trading class, as well as the stock market program in the Black Business School. And I thought that I would just kind of give you a couple of things to think about. First thing about Apple stock is I think that it's maybe a little overheated. The split announcement shot the stock price up in a way that was almost irrational. I believe it was Alan Greenspan wrote the book Irrational Exuberance. We have a lot of irrational exuberance happening in the market. It's been an issue for quite a long time. And in a way, you could think of it like a pair of Gucci jeans. If you go buy a pair of jeans from Gucci, if Gucci makes jeans, I don't know, I'm sure they make something similar to jeans. The Gucci jeans are not going to be, $50. They're not going to be $25, right? Gucci jeans are going to cost, $300, $400, $500, $600, maybe $1,000. Right. So the fundamental question, which is really a question that we were, constantly grappling with, in grad school, because we know all the mathematics behind how a stock price should be valued. But just because there's a measure of how it should be valued doesn't mean that that's the accurate measure of how it actually will be valued. And the question is, which reality is going to live, the real reality or the fake reality? The Gucci jeans, are the Gucci jeans worth only $50? Or are they worth $500 because people are willing to pay $500, right? And what happens when people have a moment of clarity and snap out of it and realize that Gucci jeans are not really worth $500? They're worth more like $50. Well, then the market value plummets, right? That happens with stocks all the time. That's what creates what you call the bubble. The bubbles are made out of your imagination. The bubbles are made out of all the emotional things, the psychological factors that drive a stock price. Investor psychology has always intrigued me. That was one of the things I talked a lot about in my dissertation. And the thing is, when they say psychology or mindset is reality or belief is reality, that kind of is true, right? You believe that Apple stock should be priced at a certain level, so it gets priced at a certain level. And as long as you know somebody that's willing to buy it from you at a certain level, then you could be good. The issue with Apple, though, from a fundamental standpoint, is that a lot of people falsely believe that a good company always makes for a good stock. That because the company is a great company and because the company is making a ton of money, that means it's a good buy. And one of the rules of investing is buy low, sell high. And another rule is that there's no asset in the universe that's always a good investment at every price point. So, for example, if I say to you, I've got this Mercedes, it's got a wood on the panel and leather seats and TVs in the back and all this other stuff, and chrome wheels or whatever, and I say, well, would you like to buy it? Well, you shouldn't be able to answer that question. You can't answer that question. You're not supposed to answer that question. Your next question, you should answer my question with a question that says, well, how much does it cost? Right? And then you can answer the question, because then you have full information. You have both sides of the chain. So a lot of times in investing, people get excited about purchasing an asset at any cost. And I'm going to tell you right now, Apple is very expensive. There are far better deals on the stock market than Apple. Now, is Apple going to crash? I don't know. It depends on whether or not the people's suspended belief systems will continue, because maybe they just feel that Apple's magical and they don't care about the fundamentals, because there are fundamental equations you can use to actually determine what a stock price truly should be. But just because you've calculated what it should be doesn't mean that that's what it is. And Apple has had an amazing run. In fact, I pulled up the analytics on Apple for the last few months, and let me tell you what. Let me look this up real quick. Do me a favor, hit the thumbs up button if you haven't done it yet. Please hit the thumbs up button. Apple, at the beginning of this year, Apple was trading at 300. It was trading at 300 at the start of the year, and that was before the crash. Now it's over five. Now it's 503. 503. Do you understand how ridiculously insane that growth is? I'm not even talking about what you would have made if you bought it during COVID, back when I was telling you guys to go in. I told you specifically which stocks to aim for. I said the FANG stocks, the safe haven stocks. Apple was a safe haven. The stay-at-home stocks. FANG, Facebook, Amazon, Apple, Netflix, and Google. And then you throw in Microsoft. These are some of those companies that did well. They did well first because these were kind of the police officers of the stock market. These were the bouncers of the club, if you will. This was the safe spot to be in an uncertain environment. There was a lot of uncertainty. So if you bought Apple at the bottom of the COVID situation, you could have got it at 224, and your value would have over doubled. And I think Tesla's doubled as well, and a few other companies have. So your problem is that Apple is a great company, but it may not be a great stock. A lot of the analysts' price estimates for Apple do not exceed $500 and something. And so I'm not telling you not to do it. I'm just telling you to be careful. And I'm telling you that there are definitely better investments out there in terms of what you can expectations. Actually, as we move on, if you haven't learned to invest yet, if you just watch and are you sitting on the sidelines, the biggest mistake you can make in investing is to not invest at all. So the Black Business School can get you started for free. There is a free training that I have that's been seen by well over 1 million people, probably more, that will get you started investing in about 10 minutes. So if you're interested and you'd like to get started and you don't want it doesn't cost you anything, go to firstshareofstock.com. That's firstshareofstock.com. I do offer you a 90% discount to get into my investing mini class. So that offer is there, but you don't even have to take that. You can literally go in and get the free training. Just get started, because investing is important for your family. Let's stop with the struggle-nomics. No more struggle stories for our kids. Let's tell them let's have them tell positive stories about their childhood, not stories about how, they had to eat roaches for dinner and bologna sandwiches with no bologna. Like those were our stories. Those should not be your children's stories. So the reason, if you want to know my thinking, in terms of how I processed the big price bump that occurred with Apple after the split announcement. The announcement is what matters. It's not really the actual act. It's what you announce, because that shifts expectations and that provides information. Information and expectations is what moves stock prices in general. And the equations that are applied are very simple to understand if you're a mathematician, but which we're not, and you don't have to be. But the interesting thing is that assets are not actually priced by mathematics. They're priced by people. They're priced by human beings who may not really understand what the fundamental value should be. And that's okay, right? It's okay for people to get excited about a stock, like, for example, Robinhood during COVID. So many speculators came into Robinhood, and these were just straight up gamblers. I'm talking about people who, not everybody, but a lot of the people who got on the app and started buying and trading options were people who were gambling on sports, and they got bored because COVID hit and they didn't have the ability to gamble on sports anymore. So they started gambling on stocks. And so these people can drive up prices and create these bubbles. But the issue, though, is that every time you create a bubble, there's somebody that's waiting in the cut to take advantage of your irrational exuberance. Every time you go out and you want to get high, there's always somebody sitting back observing you who wants to sell you the crack. And so what's happening is that the exuberant investors, the irrational investors, the excited investors are buying. And the people that are selling options to them, selling options, for example, is a great way to make income on your portfolio. That are selling stock options to them or selling shares to them are what they call the graybeards, the institutional investors who know some of the things that I'm talking to you about right now. They know that Apple is pretty close to being overvalued. And they know that a lot of the investors do not understand fundamental values, and they'll buy Apple at any price because Apple's a great brand. And so I'm not telling you what to do one way or the other, but these are dynamics you want to consider. I believe that the reason Apple stock shot up after the announcement of the split was because, one, there's the publicity. Announcing a stock split is almost like I don't know if you ever heard this, but they say in relationships, when people have trouble in their relationships, they're tempted to go have a baby because a baby provides a little spark and kind of gets everything back together again. But then the spark doesn't last. Right. So Apple and Tesla, if you notice when they announced their splits, there was a spark. So I believe part of it was driven by the additional attention and publicity. But the attention and publicity is also correlated with or connected to what they call the signaling effect. The signaling effect basically says that, okay, the management must know something good. The managers know more about the company than anybody. So when they announce a stock split, there are people who believe that the announcement of the stock split is basically a signal to say, hey, y'all, good times are on the horizon. It's going to be good. It's going to be good. Right. But that doesn't always work. It doesn't always apply. Also, when you have the split, you have more action in the stock option market, in the options market. That's the only tangible differential that I can see that occurs as a result of a stock split. There's no reason that the stock is more affordable in a split because you can buy fractional shares. Fractional shares means anybody can buy Apple. If you have $5, you can buy shares in Apple. You just won't get a whole share. You'll get a piece of a share. So the creation of fractional shares, to me, it devoids this idea that suddenly Apple's more affordable and people can buy it, because that's what they call the clientele effect. So that's another theory on why stock splits happen and why they matter and all this other stuff. So that's it. I think in the options market, I think you'll see a lot more people trading Apple options. I wouldn't be surprised if that does cause another boost in the stock price. One of the other warning signs with Apple I'd be very thoughtful about is the fact that Apple was a safe haven stock. Apple was the hospital, the financial hospital that everybody ran to because there was a disaster. Apple was the company that provided certainty in an uncertain world. Now we're going back to a more certain world. So the question is, if the hospital's full during the disaster, is the hospital still going to be pretty full when the disaster's over, when the coast is clear and everybody's safe? are people still going to run to the hospital? Are people still going to run to the hospital as much as they did when there was a disaster? I think the answer is no. I think that your best plays in the market are going to be stocks that that have been depressed for a while, what they call the recovery plays and the cyclical stocks, things like that. And that's where a lot of my money is actually going. So that's my 2 cents on it. If you want to know what stocks I'm picking, I actually tell my students a lot of the stocks that I add to my portfolio. So feel free to go to the Black Stock Market Program. That's theblackstockmarketprogram.com. THE, that's theblackstockmarketprogram.com. And also this week in the Black Business School, we are having a special lecture on, I believe it's on how to purchase hotels and things like that. And we have this really great program called the Black Lecture Series, where we have lectures from experts, various experts from the Black community on how to form the perfect estate plan, how to get government contracts. We had a guy come in that's actually done over $1 billion in government contracts, the 10 Commandments of Black Economic Empowerment, all kinds of stuff. So feel free to go to theblacklectureseries.com if you want to take a look and you want to join us this week. That's theblacklectureseries.com. Asusu, Tyson says, Asusu, Blessing Loom, friends of friends, gifting circles are pyramid schemes and illegal. Yeah, I spent a lot of time talking about Susus and Blessing Looms and thinking about it, because I really wanted to give you an answer that made sense when I was asked about it. And they are illegal, right? So just make sure that's clear, right? So if you about that life, I'm not judging. I don't judge. We got a lot of people in our community that got, criminal records and whatnot. I don't judge any of that, because we know what it is. We know what it means to be Black. But I think just being fully aware of that and being careful is a big deal. Meaning that, I really can't help but feel that they like to use us as examples. And so if you're running a loom and you've got, 3,000 people in the loom and millions of dollars or hundreds of thousands of dollars or tens of thousands of dollars is flowing through, you make a great headline for the feds, right? You make a great headline for, the big arrest, like, kingpin of illegal pyramid scheme is the Black Bernie Madoff. He gets 120 years in prison because he swindled, tens of thousands of people out of their money, right? That gets a lot of attention, finding someone who's doing well financially and saying that they're a fraud or a scammer or whatever. Those are always interesting headlines. They make for great episodes of American Greed. And I don't want you to be in that category. So if I were you, I would just, move forward mindfully. But really, if you want to know my 2 cents on it from a personal standpoint, you take the law out of it. To me, the blessing looms, which are not susus, by the way, they're not susus. They call them susus. That's a lie. They are not susus. Stop letting people call them susus. Susus are actually this respected tradition of community economic support. That's not a loom. A loom is a pyramid scheme. And the pyramid scheme, and the thing about the pyramid scheme is that to me, it's honestly just gambling. That's what it is. It's gambling, and people gamble all the time. I don't think there's anything unethical about gambling as long as you know what it is. That's what I always tell you guys. If you go into stuff, make sure that you do as much as you can to try to be as economically literate as you can be so that you're not surprised by the outcome. For example, a lot of people came to me about the Tulsa Fund and, because some people apparently are upset because they want to get their money back and maybe they didn't look, I don't know, maybe they didn't look at the contract, but the contract, when I gave my money over, I read it and I said, oh, there's a lockup period. A lockup period means you can't have your money back for a certain time. That they can't, they can't just write a check to you because they got your money deployed. Your money is almost like a soldier that's been sent over to Iraq. He can't come over and pick the kids up after school now. He's gonna be in Iraq, and he signed the deal to be in Iraq for a year. And so you got to wait till the year's over. Now, I'm not saying that makes it all okay, but think about this. There has to be a reason. When because I'm actually enjoying more of the conversation about the Tulsa Fund now that I've meditated on it. There has to be a reason why there are these upset investors, and it's not the majority, right? It's maybe 10, 15 people or something like that, right? Out of thousands of people invested, 15, 20 people are mad, whatever, right? And I'd be curious to know, how it is the case that you feel that, something terrible happened to your money, but the Department of Justice investigated the Tulsa Fund. The Securities and Exchange Commission investigated the Tulsa Fund, and they found no wrongdoing whatsoever. They found that it was, it was doing everything legitimate. And here's the deal too. Here's the thing I want to really say on that as well is just because if it turns out, let's say that if at some point, if it becomes, if it turns out that it loses money, let's say that 3 years from now, let's say it started at 10 million, it ends up at 9 million or whatever. That doesn't make it a fraudulent move. An investment that doesn't work out is called life. That's called life. Life works like that. It's like basketball. You're going to miss some shots. A missed shot does not mean it was a bad shot. It just means that the shot didn't go in the basket. A lot of investing doesn't go in the basket. So when you become an investor, make sure you know what it is. If you hand your money over, make sure you read the details of the contract or have somebody look at it for you. Also, just know that if you invest consistently, you're going to lose a lot. You're going to have a lot of times. That's why a lot of people aren't really ready for, really heavy duty investing because the life of a millionaire investors is you're losing every day. You're constantly losing money, but you're losing over here, but you're making money over there. And then the good outweighs the bad. Same thing is true of the business owner. When I started running my business, I would talk to my friends that had jobs and they would freak out over how much money I had to spend or something would go wrong. And they'd be like, oh my God, you lost that much money. How did you lost $50,000? And I'd be like, yeah, that really sucks. But they don't understand that opens the door for you to go make $100,000 somewhere else. Right. So I'm not saying that it's all okay and that the world is wonderful and good. I'm just encouraging you to take the time to really embrace financial literacy, because one of the biggest challenges I think we have in the community, as you have people like Jay-Z and others, pushing the idea of entrepreneurship. And I love that because I've been pushing entrepreneurship for the longest, is that the big problem we have is that a lot of people don't understand entrepreneur life. Entrepreneur life, investor life is not the same as paycheck to paycheck life. Right. It's not the same, being a boss and investing is not the same as being an employee. You have freedoms that employees don't have. Nobody's telling you what to do, but you also have challenges that employees don't have. Right. So maybe having partners involved or, finding ways to calibrate your risk and minimize it might make you feel better. And that's in investing. We call that risk tolerance. Not everybody has a high level of risk tolerance. Not everybody can stomach the ups and downs that come with investing. But if you take risk the right way, there's also a universal relationship between risk and reward. Like, how people, and you've known this your whole life. You ever hear people say scared money don't make money, right? Or nothing ventured, nothing gained, right? Or you'll never discover new lands if you're always afraid to leave the shore, right? People say things like that. When they say scared money don't make money, what they're saying is that there's a positive relationship between risk and reward, that typically investors who take the most risk end up having the most reward. But there's a specific condition to that. It must be what is called efficient risk or calculated risk. This as calculated risk, where you thought it through, did your research, you knew what it was, you took a chance based on information that you had, and you took your time, and then you made your move. Now, if you're jumping in butt naked into every crazy situation that you see, then that's on you. That's not efficient risk. That's very sloppy risk that can cause you to lose everything. And so when you hear about athletes that lose everything or whatever, a lot of times it's because they took sloppy risk. They didn't take efficient risks. So anyway, so if you want to learn more about stuff like that, feel free to hang out with us in the Black Business School. Our options investing masterclass actually meets tonight. And everything's recorded. So all the content's in there. So if you'd like to join us, feel free to go to drboycemasterclass.com. That's drboycemasterclass.com. And also, if you want your kids, we just had a school system that looks like they're about to adopt our business school for children for their Black kids that are staying home during COVID, which I think is a great idea. It's going to really change their lives. If you'd like to take a look at the program, the first month is $1. So you can give it a try for $1. You can go to blackmillionairesoftomorrow.com. That's blackmillionairesoftomorrow.com. All right. So Cam is calling me a bald-headed bitch, which means Cam needs to go get a woman or something, because Cam's up in here trolling, wasting your time trolling, man. Go see your girlfriend. Well, Cam probably ain't got no girlfriend. So everybody give let's have a moment of silence. Pour some liquor on the curb for poor Cam, who ain't got nothing to do with his life. Go do something positive with your life, brother. I love you. All right, guys, have a good day. And please hit the thumbs up button, share, subscribe button on your way out. Everybody, please hit the thumbs up button. And also you can follow the Black Financial Channel on Instagram. And last but not least, don't forget that we're doing the lecture this week on how to buy hotels and things like that. So you can go to theblacklectureseries.com. That's theblacklectureseries.com. All right, guys, I'm out of here. Have a good day. I'll see you soon. Be good. Peace.
Here we are, clan the isms, cataclysm great. Our people out here struggling, trying to make it in this state. Everybody out here doing it, but we the ones who late. Now family, we the ones who gotta delegate. Get that money in the power, never be fake. Stick to cosign for 3. What did he say? Create jobs, support our own. Educate the same and buy back your home. Got 3 degrees, triple 10. 3 PhDs, now we on the CNN. DBTV, let's talk about negligence. Ignorance is bliss, but we can turn it to intelligence. Believe none of what you hear, half of what you see. Let's break it down.